ANC's National General Council wound up in Durban last Friday with no developments really on nationalisation and the rand, but with some movements on the proposed national health insurance. Joining with more shortly will be Jerry Vilakazi. He's the CEO of Business Unity South Africa. In the meantime, I'm joined by independent health economist Alex van den Heever, and joining us from our Cape Town studio, political analyst Daniel Silke. Gents, thanks very much for coming in today. Alex, your overview of the conference, good for investment and business, bad for investment and business. How did you perceive it?
It would be difficult to judge. It depends really how much would come out as kind of concrete developments from the overall conference itself. In terms of healthcare, it's also less clear what is real and what is not within those proposals.
Okay, we'll get to the healthcare issue in just a moment. In the meantime, I'll bring Daniel into the conversation. Daniel, how did you see the conference last week, and do you think that President Jacob Zuma came out of it stronger?
Well, I think this was a critical conference for Jacob Zuma. He had to restore his own personal leadership within the ANC. He had to develop a sense of continuity going forward for the balance of his term in office that was up for some degree of discussion before the conference. And I think what he managed to do was he managed to instill a certain style of leadership that we haven't seen for some time from Jacob Zuma. I think he will have satisfied the centrists within the ANC and many of those outside of the ANC in the business community as well. So the conference, I think, was generally a positive for Zuma, although I think the positiveness that we've seen for his stance upon party discipline, the more broad discussionary framework for issues like nationalisation will still come under attack in infighting and policy disagreements going forward over the next 2 years.
Now, of course, Alex, nationalisation, we had Finance Minister, or the previous Finance Minister, Trevor Manuel, who's now Minister of Planning in the Presidency, talking about the cost of nationalisation, money that would have to be used to buy back mines. That's money that you really need for issues like healthcare. They discussed the National Health Insurance Scheme, and it looks like a slightly scaled back, staggered version that the ANC is looking at this stage. But of course, this is just an ANC document at this stage. It's by no means government policy, is it?
No, it's not. And there's also quite a lot of thinking that probably still needs to go in to achieve, I think, the aspirational side of the proposals. And I think that is a sort of a key issue. There are major design issues, quite aside from the resourcing issues, to discuss. In terms of the sort of trade-offs, the actual resourcing levels that are actually put forward in the document are a bit confusing, but they're actually very substantial. Even in the first 5 years, they're talking about sort of 17% per annum real increases in budget for up till 2017, and thereafter 7% per annum in real terms up until 2025. This more or less triples the budget, the health budget, by about 2017. So these are fairly substantial numbers.
And how are we going to pay for that, do you think?
In fact, if I were asked to look at a policy or to develop a policy, I would probably be very shy about putting forward such a proposal. I would expect that it would be very difficult to finance. I don't really think that it can be financed. A lot of the proposal is actually motivated on the basis that it will have so boosted the public services after a short period of time that people will be happy to drop out of medical scheme cover, and then they will see this as a cost-neutral impact on their sort of household incomes. That's a fairly big assumption, but I think that is the assumption underpinning this proposal, that you kind of shock the public system back into life, and it becomes so effective that the kind of middle-class flight from the public sector will recover, and overall we'll be spending the same amount of money.
Daniel, your view on the NHI, and of course up until the conference it really was thought that this had been put on the back burner. Do you think perhaps the President scored a point by bringing this through? And you only have to think back to President Barack Obama and the National Health Scheme in the United States a few months ago.
Well, I think there is a sort of a global understanding and a global acceptance that these schemes are certainly up for discussion where there are shortfalls in domestic systems like we certainly have in this country. It's a good political issue to tackle. It's a social issue. It also is probably a good rallying cry for ANC members who feel as though not enough is being done from a political point of view to assist the poor. But I think the fundamental point is that we spend a very large amount of our budget on healthcare and on other other social services for that matter, on education, for example. And much of this very large spend is inefficiently spent. And we have a huge problem in terms of the efficiency of our bureaucracy and our systems to cater for the very large budgets that we do throw at these very critical issues. And I think that there's a long way to go between the aspiring aspect of instituting a national healthcare initiative for this country, but also cleaning up our own bureaucracy, cleaning up our act with the money that we already spend in these critical issues. And I think until we get the bureaucracy correct in terms of existing budget allocations, I would be very wary of committing huge amounts of money to something where our systems really are still struggling to cope with existing problems.
Alex, would you agree with that? Do you think we have to learn how to spend the money we have properly first before we try and spend something? And I think it would cost about 128 billion rand in the first year in 2012 if it had to go ahead in its current form.
Well, it would. Firstly, it's unclear how much they're proposing to spend in 2012. They were suggesting an extra 12 billion rand only in that period, but thereafter they're talking about very, very substantial increases. I would definitely agree. Our public system, part of why it's failing is actually the absence of effective governance and accountability structures. That means that in many countries in the world, you focus on decentralizing services and putting strong governance and accountability and local oversight in charge of services. What you don't do is create structures which are highly politicized. And what we've seen is really a caving in of the public services because the people who run them don't feel accountable to any authority that has an interest in the local community. The proposals don't involve changing that. In fact, they propose worryingly the establishment of a centralized structure which will absorb a lot of what is being done at this sort of local level, but also put it under a politicized governance structure, which are known to really create enormous vulnerability. Now, if you concentrate that amount of money, billions of rands worth of procurement, in which only a few people make decisions about all of this, it's a recipe for corruption and governance failure and government failure. And I fear that particular issue, governance and accountability, is not seen as important. That when the systems fail, then you want to throw money at it, but you don't want to change the things that matter.
Daniel, just going into the conference, it was thought that nationalisation was going to be one of the key issues discussed, and of course that fell off the agenda, but it was brought up towards the end of last week. Now there's been no resolution on this issue, also no resolution on what to do with the rand and the exchange rate, etc. Do you think that the President's just stalling this issue because he doesn't want to make enemies in the short term by taking a firm stand in either direction?
Yes, I think there are two issues at stake. Clearly for Jacob Zuma, what was critical at the NGC was to bring a degree of unity to the party, especially with regards to local government elections next year. The last thing President Zuma wants to have is a fractious ANC alliance when campaigning for the local government elections is going to be critical to the future success of Jacob Zuma. If Zuma does not do well in those elections next year, he becomes even more vulnerable as a president. But I think that was one of the key motivations for not coming up with anything definite on these issues. But I think too that Jacob Zuma and the current leadership of the ANC were quite deft and clever in their dealing on an issue like nationalisation. What they did was they took the debate about nationalisation effectively out of the hands of the ANC Youth League. They broadened the debate. Jacob Zuma said, we're opening up the debate on nationalisation to the whole party, and in fact by that to the whole country to discuss. And whereas nationalisation had become the core issue of the ANC Youth League, now Jacob Zuma has freed up other elements within the ANC to talk about nationalisation, and some are going to say that they don't like nationalisation, just as we've seen in the course of the last few days, Trevor Manuel questioning aspects of it in a much more public and vocal fashion. And I think this is a very clever and commendable way in which the debate is going to be recirculated into a much larger, broader debate where the ANC Youth League and the populists themselves don't have the only say about this issue. And we might see this strategy also unfold for other vexing issues like the performance of the rand going forward.
How about relations, Daniel, between the ANC and its alliance partners, the COSATU and the South African Communist Party? Because I think although President Zuma did show that the ANC was the strategic centre of the alliance, he also tried to mend some fences, and some that were damaged by the recent COSATU strikes.
Yes, again, I think this is all playing politics in advance of local government elections to get the two key components back on track so that they assist the ANC in winning as many local council wards as possible next year. I don't think that this relationship is going to remain a friendly, warm, fuzzy relationship. I think we're going to see ups and downs in the relationship. But for the South African Communist Party in particular, there's nowhere else for them to go. They need the power that the ANC offers them in order to have a say, in order to shout above their numbers. For COSATU, of course, going it alone is perhaps slightly more feasible, but I think that the nature of South African politics currently is that both these alliance partners still see their future role for the moment in a ruling alliance with the ANC. I don't think there's any threat to break up this alliance, and they will try and maneuver their own particular ideological positions, broadly speaking, within the alliance with a president like Jacob Zuma, who they believe they can influence. Now, the real question for the remaining term of Jacob Zuma is, will he resist continued attempts by the alliance partners to influence policy? It looks very much as though he will, and we will wait to see what the centrists in the ANC's economic think tanks come out in terms of a new growth strategy, which I suppose is imminent, and I suspect many of those strategies will be much more centrist in orientation than will be bending towards a communist, populist, or for that matter, workerist notion, given the various inputs from all the various alliance members.
Of course, Alex, you came and chatted to us in studio during those public sector strikes where we did have those tense relations between COSATU and government, and of course hospitals quite badly affected. Do you think we've learned anything from the strikes and the impact it had on the private healthcare sector for taking forward a national health insurance?
Well, one of the problems that is exposed in the public system is really how you renegotiate salaries, and what we've got is a very destructive and conflict-driven approach to dealing with those. And whatever we do develop, to the extent that we have certain services that are generally available, it would be absolutely essential that we do not have wage negotiations disrupt service delivery. And so there are many methods that are used internationally that are superior to what we have in South Africa. That's the first thing. The second issue is that the conduct of a lot of these strikers is worrying, because it actually suggests it's an indication of how they see their jobs when they're back on the job. You do not go into a theatre and you stop and interrupt service provision. You do not shut down essential services. You do not do these things in a sort of responsible society. So the trade unions have to also look at their conduct within this overall approach. And a lot has to be done to make sure that we retain and protect and have confidence in our public facilities. If we don't have confidence in public delivery, which have really deteriorated substantially in the last sort of 16 years, then no strategy that actually wants to develop a solidaristic, develop a degree of solidarity will work.
Gents, I'm afraid we're out of time. Thank you very much for both coming in today, and of course Jerry Vilakazi, unable to make it into studio this afternoon. That's of course independent health economist Alex van den Heever and political analyst Daniel Silke joining us from Cape Town. Let's have a quick look at the markets. We currently have the JSE's All-Share Index up by just under 1%. It's trading at 28,988. Resources 20 up by 2/3%. Industrial 25 1% firmer. Financial 15 up 1.5%. Banks up by 1 2/3%. On the commodities front this afternoon, Brent crude trading just below $79 a barrel. We have gold trading just shy of that $1,300 an ounce mark. Platinum's trading at $1,633.15. Dollar rand, 7 rand and 1 cent. We have the euro rand trading at 9 rand 43, 9 rand 44 almost. We have the euro dollar in the meantime trading at 134.58. Bidvest Bank has begun buying and selling Chinese yuan notes, the first local bank to offer the service. Joining me with more is Craig McFarlane. He's the head of retail operations over at Bidvest Bank. Craig, thanks very much for coming in this afternoon. And I see you've brought a bunch of those yuan notes that you're going to be trading.
That's correct.
Tell me, are we seeing a growing interest in South Africa, well, in China, by South African businesses, and how are they actually going to be using these to facilitate the trade?
Well, really, I think the yuan note is brought in primarily to facilitate travel to and from China, from people going to China to travel there and be able to change money easily and spend a little bit easier than having to find a place with a dollar bill or euros or pounds and they have to change them there. So this is really not a trade matter per se, but really just from a travel foreign exchange perspective, to allow people to take their currency, land safely, get a taxi, get a bus, get a cup of coffee, whatever they need, quickly and easily, rather than have to find a place to change money first.
And you're seeing a growing number of travellers going to China and trading some of the money before they go.
Yes, there has been a significant increase in the number of people travelling, which is why we've now gone this far as actually sourcing the currency, and we now have stock in our branches in Southern Africa, and we can now take them into the branches and sell them to people. And also people coming back from China. When they come back, often they've got a few yuan left in their currency, in their purse or their wallet, and they need to then change that back in rand rather than have money which they are stuck with after they've ended up on their trip.
How about some of the businesses that you have as partners who might be doing business with China? Do they still really do that on a dollar basis?
Yes, the business itself is still primarily dollar-based into China, so that's the main form of commercial exchange. But this is really focusing on the travel side of the business, as I said. You know, we're doing that there with the people there. Commercial foreign exchange, trade exchanges are done primarily to the dollar still.
Just given the volatility that we see in the rand, how attractive is this though? I mean, would local travellers want to be holding on to yuan notes? Wouldn't they rather travel with dollars? Because I presume you can change dollars on the other side.
Well, yes, but the pricing, we changed them on the, we've linked it to the rand dollar and the dollar yuan rate, so that we then have a very competitive market rate. So you're buying the currency, yes. Also, always with banknotes, is a slight premium you pay for a banknote, because obviously it's something you've got to have stock on and be able to sell and trade in. But from a convenience perspective, the markup or the margin you're paying for convenience is so small that really we think it's a very viable alternative to the notes, given the frequency of people traveling up and down the whole time. Just two things I'd like to point out. One is that people coming into China can only take a maximum of 20,000 yuan into the country, and obviously coming out of China as well, the same applies.
Okay, so they also have quite strict currency restrictions, just as we have in South Africa here.
Correct. But that's on foreign currency only. On yuan notes, foreign currency notes, you declare how much you take in, you take it out, no restriction.
Any size of the market? I mean, what sort of demand have you seen in the run-up to introducing this?
Well, we started trading this on Thursday afternoon. We opened the rates up to our branches. We've had people coming and changing currencies. Obviously, it's still early days, but we have a lot of interest from companies, from people traveling. We've spoken to the airlines with people going there, letting people know that they can get the notes or change notes coming back with us. So this last weekend alone has seen a significant uptick in the transactions.
Mostly business travellers, or do you think also tourism?
Mainly business at the moment. I think tourism will pick up in time, but obviously at the moment the big market right now is business.
And of course you are the first bank to launch this. Would you envisage the other banks following suit, just given the growing visitors leaving South Africa for China?
I'm not sure. No, the big banks, the big four banks, really don't trade in, other than the sort of 5 or 6 major currencies, a lot of the exotic currencies. These are exotic currencies, and they take quite a lot of specialist exposure and trading and pricing. So I'm not sure that the big banks will necessarily follow suit on that. They may, I'm not sure. I would be surprised if they do, because it's something that you have to be a specialist for an exchange trader like we are to be able to trade this correctly.
How much profit is there for you though? Is it just the usual fees that you charge on any foreign exchange transactions?
It's just our normal foreign exchange margin and a small commission we charge, that's all it is. But it's really a service thing. We're looking at we call ourselves the foreign exchange specialists, and we're focusing on being foreign exchange specialists and having the range of currencies. We trade in over 60 currencies in banknotes, having those currencies available for people when they travel.
Great, thank you very much for coming in.